Hello, ladies and gentlemen. Good day and welcome to the show. I'm glad to have you guys here on this Tuesday, the 11th of August, 2020. Okay, listen, guys, it's more imperative than ever that you guys at home have a little stash of $5 bills put away for yourself. Real physical cash. And I'll tell you the reason why. Right now, we've just entered into a period where the stock market could undergo what I would call what it would represent would basically be like a flash crash. I'm going to call it the avalanche. Because, what makes an avalanche fall? The snow keeps coming down. You get an overweighted big bluff full of snow, and it's big and it's heavy and it's ready to fall. Sometimes they'll cause an avalanche to fall just by shooting off a gun into the air, and the avalanche will come down the mountain, right? The stock market's in the same position right now. It's just like when I look at it, what I see is a big bluff of snow ready to fall, And the thing is what we could get, because of computer trading and everything like that, we could get a avalanche where the market could fall in 1 hour. So far, so fast, that the Fed doesn't even have a chance to react. And the conditions are right for it now. They've never really been right for it, but right now the conditions are right, and I can see this. And what would happen then is the financial system would freeze, it would lock up. Everything would lock up. Because everything's traded now on the computer algorithms, and they understand the numbers. The computer crunches the numbers, and if the stock market were to fall off like that, an awful lot of companies and stuff would suddenly find themselves insolvent. I'm not talking about this avalanche. I'm talking about not a regular fall in the stock market. It's a bottomless pit that the stock market could fall into within 1 hour. Just the whole thing could just melt. And it could freeze the financial system, thereby freezing all the banks, freezing all assets in the whole world. It'd be a freeze. Money would basically stop moving within the system. Any money that relies upon credit. Now, your $5 bills you'd store away for yourself, they would still be viable. They're not tied into the electronic system. But your bank account is tied into the electronic system. Your debit card, tied into the electronic system. All the money, this is why I say it's very important right now that you put away some $5 bills for yourself. So, you don't want to drive to Wendy's and they say, well, we're not using any credit cards or any electronic money today. The system's frozen. And you're like hungry. Well, it's no problem. Pull out a $5 bill or whatever to satisfy, or two $5 bills if you got them. You'd be all set. This could happen, and what would be the net effect, the long-term effect, if the system were to suddenly freeze like that? In the middle of the night while you're sleeping or whatever, it could start, and it could freeze the entire economic system. The stock market would be closed the next day. The Federal Reserve and the central banks would have to come in and basically unfree the system. What they would have to do is it's the same thing with a machine, when a big machine locks up, like something happens and the gears all get messed up inside a big machine, the mechanic has to go and take the cover off the machine and pull the sprockets and gears out on the floor, find out which ones have stripped treads, and replace those gears and stuff and put the machine all back together and lubricate it. Well, the central banks would have to do the same thing. They'd have to go in and find out which corporations, while the system's frozen, they would have to go in and find out which corporations failed, and they'd have to bail them out, and they would have to find out which banks failed, and they'd have to bail them out, and this could take days while they slowly go through and sort this out to the point where they could open the system back up again. It could even take weeks. And quite literally, it'd be a banking holiday. Everything would be closed that's financially connected to if this were to happen. And there's a danger of this happening right now. We've never really had the danger so high as it is right now for this to happen, that the system could lock up. Suddenly, overnight, you wake up the next morning, it's locked. Your bank's closed. All ATMs don't work. This is the sort of thing we're facing if we were to get this sort of monumental crash that would happen suddenly. It would be just carried out executed by the computers would execute this crash, and it would happen so fast that they wouldn't be able to stop it except close everything, close the markets, close the banking system, close everything. Everything that's connected to the electronic monetary system. And there's a danger of this actually happening right now. And there's never really been as high a danger. Another thing, silver and gold, we had a little crash in price. The silver market right now. Well, let's get the charts open right here and take a look at what's going on with this. This is your crash in silver. It's went down to $27, right? A couple dollars down from what it was. The thing is this is going to create a buying opportunity, and don't you think everybody out there doesn't know it? They're all going to want physical. They're going to come after the physical silver, what's left, to try to buy in on this dip. There's not much left. I'm not sure how good it's going to hold up. If you're going to be able to get any physical. But the amount of orders that'll come in wanting the physical will be a backlog. There's going to be, I know there's going to be a backlog of orders. What to do in a situation like this, I think the backlog's probably going to be bigger than what they can fill. This is going to create situations down the line, maybe a month or two from now, when these backlog of orders can't be filled. At a certain point, they're just going to, and the people are going to put in new orders and so on, and be even more desperate to get it. And it's flying off the shelves, this silver, and I mean, in the real form, physical form. People want physical. They don't want some security, some paper contract. They want real thing. They want the real thing. They want it in their hands. They want to hold it and look at it and see how white and pretty it is, But they ain't going to get it. Not right now. I think it's getting harder and harder to get it. And this price drop is just going to make it fly off the shelves much faster than normal. Let's take a look at gold today. $19.47 for gold. We're looking at $80 down. That's a big drop. That's a big drop in the price of gold today. They're putting it on sale for you a little bit. I wonder how many paper futures contracts they sold today into the market. That'd be interesting. I don't have the figures on that yet. We're going to have to wait and see. Cryptocurrency today. 351.9 billion, 60.5% Bitcoin dominance, and a Bitcoin price of 11,529. Now we see the cryptocurrency price right now, guys, is moving lockstep to the gold and silver price. Cryptocurrency, the gold and silver prices drop, cryptocurrencies drop. This is a signal, big, fat signal right in your face that says cryptocurrencies have started to be accepted as a security like gold and silver, like a place to store money out of the dollar. And it's starting to be accepted as that, even though a lot of people, they want to hold it in their hand if they can't see it, actually put their fingers on it. They don't believe it's real. This tangible thing. And these are intangible products. They're held on your computer. I guess you can see your Bitcoin on your computer screen, but you can't really actually hold it in your hand, Dow Jones today, it's only up 267 points again at 28,055. I'm going to tell you, this is a hyper bubble. And, now when you mix a hyper bubble with computer algorithm, I can't pronounce it, computer trading, okay? When you mix a hyperbubble with computer trading, it can happen at the speed of I guess it happens at the speed of light. The trades fly through the they actually fly through the electronic lines, these trades, at 186,000 miles a second. That's how fast they move, these trades. 186,000 miles a second. That's how fast the trades are moving through these electronic lines. And you combine that with something that's this overbloated, what you have is an avalanche ready to fall. I mean, I think it's just about reaching the peak of peaks of how high it's going to go right now. And yeah, maybe it could go a bit higher depending on what the Fed does, but there's an old saying. You got this saying has proved true for thousands of years. What goes up must come down eventually, And, it works on charts and everything, You throw a ball up into the air. What happens? Well, it has an apex where it goes up into the highest part of the energy that's thrusted up into the air. It goes through that apex, and then it goes along level for a little bit, and then it starts to fall back down to earth, right? And that's the way with the market, It's been tossed up into the air by $2.2 trillion back during the CARES Act and stuff back in March. And now it's reaching the apex of that arc, And what comes next? Well, unless we can defy the laws of gravity, well, the Fed can. They can pump out another, or in other words, say the ball has to fall back down though before they can toss it back up again. That's what I'm thinking about. That the ball's going to fall back down, and then the Fed's going to toss it up even higher with even more money. That's what I'm thinking to myself. But it can fall so fast, it can fall quicker. They could be, quite seriously, they could be off doing something, filling up their new swimming pool with water, and they can get a phone call. The stock market's crashing. These are the Fed officials, and they have to. I gotta go, honey. I gotta run into the office. I just got a call. The market's just gone crazy. And the market's been halted. It's just stuff like that. It can happen. And they have to be made aware of it themselves. And it can happen so fast because of computer trading. Okay, let's take a look at crude oil today. $42.13. It's up 19 cents on the day, or 0.45%. Take a look at Treasuries. Now, something's going on with the Treasuries, guys. These are big movements. The yields are rising really, really fast today. We're looking at 9 basis points on the long end. That's a quick move, and that's a big move in Treasury yields. 10-year at 0.64, and the U.S. 30-year at 1.33. All of a sudden, bam, just like that, they're starting to move these Treasuries. Well, they'll have to do something about that. They can't let these treasuries rise too much. They'll have to step in and buy them. They can't let these yields rise like this. They'll have to do something. They can't let that happen. They could let about 3 days like today happen. Maybe 4 days like today happen and still be within their boundary of but they'd have to step in. They cannot let that U.S. 10-year rise above 2%, and they can't let that 30-year rise about maybe 1.75 or whatever. They can't let it go any higher than that. One of the big things that stands right out and says, hey, they can't do that, is the amount of debt that they have now. They wouldn't be able to service the debt if yields rise too high. But we have rising yields today. Let's take a look at the U.S. dollar index. I'm going to tell you, what I see is, they call it volatility. What I see is the market's on the edge of falling to pieces right now. And that the central banks are just scraping and holding it all together as best they can. but the whole thing's ready to fall apart right now. And that's what they call it, volatility. That's what I call it. I call it the market's falling apart. Everything falling apart at the seams right now. The dollar index is at 93.51, and it's went down a little bit today, but it's mostly it's fairly stable with the dollar today. Okay, guys, thank you for listening to my show. Like and subscribe, give me a thumbs up, and we'll catch you guys again in the very next episode. Bye-bye.